This may be the simplest tool to profit in trading yet. If you're looking for something simple, but very effective at finding support and resistance levels, then look no farther. In this video, I'll explain everything you need to know about the optimal trade entry. The OTE, short for optimal trade entry, is an area of Fibonacci levels that give you the highest probability of a reaction, as well as offering you a more favorable risk to reward ratio. The settings we're going to use for these levels are 618, 706, and 79. Now that you have your level set, you're probably wondering, how do you use this to find trading opportunities? The first step is to identify the area or anchor points where you want to place your Fib tool on. In order to find support, you want to select your major swing low, then drag it and select the next swing high. Now you should have these Fibonacci levels on your chart. These can act as support. If you're looking for resistance instead, to take a short position, you'll instead select your major swing high and connect it to your major swing low. Typically, you'll be combining the Fib levels together with other forms of support and resistance, like horizontals, order blocks, or fair value gaps. So now I'm going to show you what this might look like in real time. In this example, we can see that the market was in a local range. When markets are ranging or trading sideways, they're typically engineering liquidity on both sides of the trade. So here, it made its first move lower, taking out this swing low. Then it began to move up aggressively, tapping liquidity at these resting equal highs. It shifted to a bearish trend, making significant lower lows. Now, if we're looking for short opportunities, we'll have to find a good area of resistance first. Over here, we can see that this big fair value gap broke market structure. So this is an area that we'll have to watch out for. Next, we'll use our Fibonacci retracement tool again and place it from the most relevant swing high to the next most relevant swing low. As you can see here, this does line up with the fair value gap. This adds confluence to our trade idea, meaning it increases the confidence we have of this playing out the way we want it to. Once price reaches our area, we will want to wait for an entry trigger. Like here, it created a bearish engulfing candlestick after it traded to our level. This will be our cue to go short. To make it simple, we can just set our stop loss above our swing high and aim for levels lower. But let's try something different. Here, we're going to use the OTE on a higher time frame as well as on a lower time frame, and this is going to allow us to get the best risk to reward. You'll notice these equal highs right here that have acted as resistance in the past. So now it's turned into our support level. It also lines up with our new bullish fair value gap that broke our market structure. So if we take our Fib tool and use these two anchor points, we will see that it all lines up together, giving us 3 levels of confluence: our horizontal support, our fair value gap, and our optimal trade entry. Now all we have to do is sit back and wait for the market to retrace to our area. And once it has, you can look to enter that long, or you could zoom in to a lower time frame in an attempt to get a better risk to reward. So let's zoom in. Here we are at the exact same point on our chart, but on a lower time frame. Here the market traded into our support and then bounced. It began creating bullish market structure. So now we can confirm that the lower time frame is also bullish. This previous swing high can now act as our horizontal support level. In addition, we have this newly created bullish fair value gap. So again, place your Fib on these 2 anchor points and you'll have your optimal trade entry. We can set the buy limit there with our stop below and aim higher. The OTE is a powerful tool, but it's just one of many. Check out our free trading course in the playlist on my channel. If you enjoyed this video, please leave a like and subscribe for more content just like this. Comment in the video description below on what topic you want to see covered next.